Hello, my name is David Buckland and welcome to this week's Video Insight. The next few weeks are likely to see a combination of rising official cash rates and the downgrade of many companies' earnings expectations. On official cash rates, I expect the US Federal Reserve to push their cash rate up by late next week, by a minimum of 0.75% to 2.25%. The fourth increase in 4 months. In the first week of August, I believe the Reserve Bank of Australia will increase by a minimum of 0.5% to at least 1.85%. Also, the fourth increase in 4 months. While the Bank of England will increase by a minimum of 0.5% as well to at least 1.75%, the sixth increase in 8 months. As I have mentioned on numerous occasions, the Reserve Bank of New Zealand, RBNZ, has easily been the most proactive of the English-speaking central banks, commencing their tightening schedule on the 6th of October last year, exactly 6 months ahead of the Reserve Bank of Australia. The Reserve Bank of New Zealand has now tightened 6 times in 8 months to 2.5%. Given the other English-speaking central banks were very slow in attacking inflation, which is hitting 4-decade highs in most economies, I encourage investors to look over the ditch to New Zealand to get a feel of how the balance of 2022 calendar year will play out. On Monday, New Zealand released its inflation data, which quickened from 6.9% in March 2022 quarter year on year to 7.3% in the June 2022 quarter year on year. That said, the average New Zealand house price is now down by around 10% since late 2021. And various consumer confidence indexes are hitting their lowest level for decades. One wonders whether the rate of inflation is close to its peak, and the degree it could decelerate over the next 12 months will be interesting. On the earnings downgrade front, we just saw Apple indicate it would slow its hiring process on the back of a likely global economic downturn. I expect many similar downbeat comments over the next few months on the back of companies' June 2022 results. Share prices should quickly adjust to the combination of higher cash rates combined with forecast earnings downgrades, and this could promote an opportunity for counter-cyclical investors like Montgomery. That's all I have time for. Please continue to follow us on Facebook and Twitter. Thank you.